Okay everyone, welcome back to the channel. So in this video, I'm going to be answering everyone's questions about the premium footprint execution process. I'm going to be going over a full trade recap from the 15th of April so you can understand the breakout blueprint that I use. So to kick things off, so it's going to be a full trade recap specifically on one part of my system. So my system has 4 parts. We're going to be going over the execution process, right? So I wanted to take this, start this video just by talking about a post I made on Skool, right? So Skool community, you can check it out, $99 a month. It's got everything, live classes, just about everything you need to learn order flow. So if you fail to plan, you plan to fail. And so what I mean by that is the pre-market game plan between 9 and 9:30 Eastern is the only thing that you need to become profitable, right? So that is the only thing. So if you don't have a pre-market plan, then if you're planning to fail, and you will fail, right? So a pre-market plan is basically finding the right key level to trade from, so you have somewhat of a fighting chance. Because if you're entering a multi-billion or trillion-dollar market and you don't have at least a basic idea of where buyers and sellers are sitting, then it's very difficult for you to make any kind of career or any kind of consistency. So consistency and profitability start before the market even opens, right? That's a very important point. So trading comes down to knowing where buyers and sellers are sitting and your ability to read and react where they are, right? You want to read and react to price, not guess and gamble, right? There's a million different guessing and gambling approaches out there. Reading and reacting goes a long way, right? It's simple, but nobody ever plans their market, or nobody has any kind of game plan. So I've spoken to a few traders, they tell me that they look at the overnight session, the Asia session, which doesn't tell you much, right? Or they'll look at the London session, they'll look at the previous day high and low. I often say in trading, it's not the people with low IQ that fail, it's the lazy people that fail, right? Lazy and arrogance, right? If you do not have a very basic roadmap or understanding of levels where buyers and sellers are sitting, and more importantly, where you want to be entering and exiting, because you need to kind of have that defined before the market opens. If you don't have that, then you're going to struggle. And the beauty with this is that there's a very simple way to do it, and I'm going to break it down in this video. So no level equals no trade. So I'm going to be going over the 4-step system over here, the premium footprint execution process. It comes down to 4 P's, and I'm going to be diving into this P and this P. So positioning to begin with, but more importantly, precision, because I get lots of questions about how do you get your key levels and how do you execute at your key levels. So this video is going to be primarily focused on the precision entry from the 15th of April, as well as where I took the trade. So let's break this one down. So the my 4-step positioning process, as you can see, it has 4 layers like this. So market structure, targeted liquidity, equilibrium, and price imbalance, right? So I want you to think of it, the analogy I'm using here is, in order for you to get the right key level, you need to go up this staircase to get your key level. And so I call it the 4-step positioning process. So step is structure, targeted liquidity, equilibrium, and price imbalance, right? STEP, the 4-step positioning process. And I'm going to be diving in specifically to price imbalance, right? Because every trader I speak to trades some kind of support, resistance, maybe they trade an FVG, an IFVG, any of these concepts. And yes, they can work, but the idea is if you're not using it in some kind of a process, and even worse, you're not using it with order flow, then it does become a problem. So we want to fix that immediately. So I often say 1 level a day keeps your FOMO away. So FOMO is fear of missing out. So what I want you to start with is, this is the 15-minute price imbalance right there, that one there. So you can see there's a gap, there's that gap here. So that wick, the bottom of this candle and the bottom of this candle, they don't touch, there is the wick. And so we're going to be focusing specifically on point 4, which is price imbalance, right? So imagine you've identified the correct structure, the correct targeted liquidity, you've applied the equilibrium or the fib correctly, and now you're at price imbalance. So I've actually assumed you've identified the right price imbalance and you've got to your key level. If you don't follow these 4 steps, then you will not find your key level. Now, the beauty of this is when you think about things systematically in a process, it becomes very simple for you to take, $500 a day, $1,000 a day. So the process you want to follow, the positioning process you want to follow, comes down to these 4 steps. And so that's part of the positioning system. So first you want to get your key level, and you want to get very particular with where you're going to be trading. So that was my key level. Now, the reason I executed off that key level is a different reason. right? That's sort of part of the precision entry, which we're going to go through now. So on school, this was my plan. So as you can see here, price came into this key level. So this was 944, 945. So the plan I wrote on school was very simple, right? This is what I expect to see. So do not force trades, do not guess, and do not rush. Now, if there's out of these three, the one which I see traders get most wrong is that they guess. They have no idea what's going on, right? They have no idea what's going on. They have no trade. They have no level, which means they end up forcing trades that shouldn't even be taken at that point. Or if they have the right level, which is very rare, but if they do, they then guess what price action is going to do, and then they rush. And so my aim of this video is to turn these three things into sitting patiently, reacting to price instead of guessing, and getting in at the right time so you're not rushing. So we want to get rid of overtrading, hesitation, and FOMO. And if you understand levels, and more importantly, the execution process that I'm about to teach you, it will become a lot simpler. So let's break it down. The mental framework before entry. And so when it comes to taking good entries or solid entries, the one word is patience, right? Patience, patience, patience. Patience is very important. So the reason I say that is that this was our key level. I didn't see price tap into this. I didn't see price tap into this level until 944, right? The market obviously opened at 930. That's 14, let's call it 15 minutes. Now, the first 15 minutes, I very rarely take a trade in the first 15 minutes. And so a very simple way to get around these problems here, so overtrading, hesitation, and FOMO, a very, very simple hack is to not trade the first 15 minutes. Because the first 15 minutes is all about the market giving you clues on what it wants to do. Does it want to go long? Does it want to go short? Right, so your job is to read the order flow here, read the order flow here. Your job is to read the order flow and try and figure out what's happening using the data that the market gives you, not data that you want to kind of build and create up in your head. Okay, hopefully that makes sense. So quickly going over London. So the London session does leave clues. So part one, we swept the Asian high. Part two, we swept the Asian low. So I've been through this in some of my older videos where I talk about how when price takes out the Asian high, it's a sweep of buy side liquidity. When price takes out the Asian low, it's a sweep of sell side liquidity. So this is not really a strategy by itself. Like I see way too many people looking at previous day highs and lows, Asian highs, Asian lows. These things are not useful unless you have a key level and you have order flow backing it up. So you can't trade unless you have those two things. However, using the Asian session can help you when it comes to your overall bias. And so the way that I look at this is when price takes out the Asian high and then takes out the Asian low before going higher in the New York session, this refers to what I call a two-phase manipulation. So it's a one-phase manipulation because yes, we've taken out Asia high. So it's manipulated the first phase here. Now the second phase is we see a manipulation down here. So we've seen two phases which indicate to us that the market wants to reverse higher, or it's a potential that the market wants to reverse higher. So this is probably the most important slide in the entire video. Entries mean nothing without context, right? So I often say a focused fool, or there's a saying, right? A focused fool will beat a distracted genius on a long enough time horizon. And so what that means is you can be a genius, right? You can have a very high market IQ or just a general IQ, and you can be really intelligent, really smart, really clever. However, if you're using your intellect to learn 10 different strategies on a demo account over 2 years, your progress will be very limited, right? And this is why I often say I was writing an article recently where I heard the phrase, or someone told me, 90% of traders fail. And I disagree with that. It's not that 90% of traders fail. 90% of traders entering the market never try. They never start, right? They never learn, right? And of course they're going to fail. Not because they were trading, but because they never started, right? They were learning due to whatever external reason, money or whatever, freedom. But the truth is most traders never even start. And so if you don't start the process, it's very difficult for you to then say 90% of traders fail. So those people are part of the reason why that phrase exists of 90% of traders fail. The reason why that phrase exists isn't because trading doesn't work, right? Or 90% of traders fail. That saying exists because 90% of traders never start. So instead of saying 90% of traders fail, what you should say is 90% of traders never actually start the process of becoming a trader. So they enter the markets, but they never actually begin the process of becoming a trader. That's how you want to look at it. So a focused fool will be a distracted genius. And so if I translate it to the charts on the right, a focused fool who reads order flow will be a distracted genius trying to guess and gamble or predict or do some craziness, right? So being focused in the markets refers to being able to execute in a repeatable way every single day. So if you don't have a repeatable system, or even worse, you don't know what goes inside of a repeatable system, then you are part of the 90% of traders who fail, or as I like to say, 90% of the people entering the market who never actually start on their journey. So I use something called the Bolt Breakout Blueprint. So this is the repeatable 4-step system I use to pull the trigger every day. The biggest mistake I see is that traders focus on the T, so BOLT, break, optimal retest, liquidity, trigger. Most traders are so focused on pulling the trigger, they don't know where to look for a break, or they don't even look for a break. They don't know what an optimal retest looks like. They have no idea what liquidity absorption looks like, and they're trying to pull the trigger to try and pass a prop or whatever they want to do. And they don't have any system in place. And so that is the reason why, again, 90% of people entering the markets never begin the process of becoming a trader ever. And that's typically disguised through YouTube videos, demo account trading, and having a new strategy every month, every week, every 6 months, right? So a repeatable system is key. So step 1 is the break. So just remember the word bolt. So I call it the Bolt Breakout Blueprint. Just remember the word bolt. So let's start with B. When price comes into a key level, you need to see price breaking above that key level. Now, just for context, I was looking for longs because we were in a very, very heavy bullish trending market as we're going towards all-time highs. This is ES futures. First thing is I'm looking for a break. Now, a break has to, there are some rules when it comes to looking for breaks and stuff. I will break those down. But typically here, so this chart here is the same. So what we saw is a huge amount of aggressive selling. We saw a finished auction at the bottom. So for those who have watched some of my previous videos, you know that a finished auction basically refers to the market's going to reverse higher. That's one of the most important things you want to look for when it comes to looking for reversals. So what you see here again, you see a green candle, tons of sellers on the inside. And then we see a break higher. So this break here was backed up by a lot of heavy aggressive buying. How do I know there's aggressive buying there? The reason I know there's aggressive buying is because of the blue inside the delta. So if you just take a look here, 148 for 331, there is signs of aggressive buying. Buyers were in control, right? So here we see the Bolt Breakout Blueprint. Again, I actually recommend writing down your framework, actually writing it down. Take a pen, right? Take a pen, take a notepad like this, right? And start writing it down. So you want to sort of come to the markets with notes, look like this. Now, the reason I say that is because if you can write things down, there is a big chance that you'll follow through on it, or at least see what's working, what's not working. So you want to journal your entries, and then you want to kind of build frameworks around them. So I've kind of done this recently to try and help myself, but also help everyone else watching. Because people ask me questions, why did I enter off that candle? What did you see at that level? What gave you confirmation there? And so my confirmation entries come down to Bolt, right? Bolt Breakout Blueprint. So the first is B, break. The second is optimal retest. And so what I mean by an optimal retest is, as you can see here, we've had a break and we've re-entered the zone. Now this, if there's one letter you want to take away from this, it is O. O and L come together, but we're focusing on O. O stands for optimal retest. And so what do I mean by an optimal retest? It needs to be at least 2 candles. So as you can see here, it's actually 1, 2, 3 candles, right? So you're looking for that optimal retest. Ideally, when you see a long wick like this, and then you see a bullish candle like this, yes, I know people try and trade without this, but on a long enough time horizon, you want to move away from wicks and bodies and all these things, and you want to try and understand this. So a focused fool will beat a distracted genius on a long enough time horizon. Because the truth is, there is nothing here which tells you want to be going long or short, right? Because there was a huge break here. What was going on here, right? What was going on here, which gave us the indication for longs? So that's where the L comes in, and we're looking for a liquidity absorption. So if you're a liquidity-based trader, or an ICT-based trader, or SMC trader, or if you use the word liquidity in any kind of way, this is how you use it. We use it through what we call a liquidity absorption. So liquidity is only useful to us for execution purposes if we see an absorption, right? I'll repeat that. If we can see a clear sign of absorption, this indicates to us a potential reversal. So liquidity absorption is a fancy way of saying who's being trapped, take the opposite. So from here, for example, here, this is the same as this. These two are the same. So what you're looking for is, you see this big wick, right? This big wick here, red wick. So just take a second here and try and figure out what's going on, right? So who is aggressive here, right? What's actually going on here? Who is aggressive here? So the answer you're looking for is sellers, right? Because there is a negative delta inside the candles. And so once you have your key level and you actually understand order flow, in order to get a precise entry, you want to follow the Bolt optimal liquidity trigger, or the Bolt breakout blueprint. The L is liquidity absorption, and this is the most important. So O and L go together. So you're looking for an optimal retest and then a liquidity absorption, right? That's what the Bolt stands for. And so a retest is only valid if it's backed up by order flow, right? I'm going to repeat that again. A retest is only valid if it's backed up by order flow. So if you're trying to trade absorption, if you're trying to trade retest and you haven't got a clear fundamental understanding of who's in control between buyers and sellers, you are the distracted, probably genius or someone with intelligence who will be beaten by a focused fool, because a focused fool can actually focus on price action as opposed to their own ego, their own emotions, their own YouTube video they watched last night. If you can just understand how liquidity absorption works, you can truthfully trade any systematic and repeatable edge and make it work. So the difference between where you are now and where you want to get to simply lies in liquidity absorption, right? Understanding liquidity absorption can take you from where you are now to where you want to get to. It's that powerful. And the final thing is, you have to pull the trigger after you see all three. So when you see all three, you need to get confident with pulling the trigger because you have all the information you need. You're looking for a break, optimal retest, liquidity absorption. So throughout this entire process, right? So this process here took, let's say we tap in at 940. I think I made this, right? So that's the Bolt breakout blueprint. So we entered at 940. This was sort of 945, 947. So we didn't execute until almost 10 a.m. Eastern. So the entry was here. The reason the entry was there, was because we had seen all three letters before. So this is the Bolt breakout blueprint. So there's your breakout right there, entry. That's the Bolt breakout blueprint. Now, the only reason we could take this breakout here was because we had seen a break, optimal retest, a liquidity absorption, and then we pulled the trigger. So I'm just going to finish off with this slide and say all of your setups, both good and bad, have to come down to this slide here. And if you're trading without liquidity absorption, then this is the reason you have psychology problems. This is the reason you have FOMO, or this is the reason you're not where you want to be. Not because you can't make it, but because you are probably that distracted genius or that distracted person with intelligence who's been beaten by a focused fool, right? Simply because they're actually focused on what the markets are doing, not on what they want to do, see, or even worse, believe.